Okay, so is your portfolio feeling like it's just running out of disk space for those profits? Or maybe you're worried about a full-on system crash? Well, welcome to De-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we are doing a deep dive into Western Digital, that's ticker WDC. We want to help you figure out, is it time to back up those gains or maybe format for a fresh start? And we're pulling this from our research captured just today, September 8th, 2025.
Yeah, and it's a really interesting time to look at WDC because the whole market seems caught, sort of, between hoping for the best and maybe bracing for a downturn. A looming recession, some say. It's a tense backdrop for any stock, really.
Definitely tense. Okay, let's dig into that macro picture first then. This morning, futures were looking pretty good, right? S&P, Dow, NASDAQ all pointing green.
Right, a cautiously optimistic signal, you could say. Short term, traders seem okay, but at the same time, you've got Moody's chief economist, Mark Zandi, basically saying the U.S. economy is, quote, on the edge of recession. He's pointing to weak indicators.
Wow, okay, so that's a direct clash then. Short-term hope versus longer-term dread.
Exactly. And for a company like Western Digital, which is, deep in hardware and data storage, this isn't just noise. This environment could seriously impact their growth or expose weaknesses.
That's a really critical point. So, okay, against that background, how does WDC's own story look? Fundamentally speaking, our discounted cash flow analysis, the DCF, it pegs WDC's fair value at $93.50, which interestingly is almost exactly where the stock is trading right now. So, sounds fairly valued.
It does. Based on that DCF model, yes.
Yeah.
But here's the kicker. Analysts are overwhelmingly bullish, like really bullish, a huge majority rate at buy or strong buy. And that's driven by this massive projected revenue growth over 50%.
50%.
Yeah. So the dilemma for you is, okay, is WDC fairly priced right now, like the DCF suggests? Or is it actually this growth rocket about to take off, assuming it hits that huge target in this uncertain market?
Right, a big if there. So what are other investors betting on? Like in the options market, we're seeing a put-to-call ratio of 0.56. So fewer puts, more calls, generally bullish sentiment there.
Leaning quite bullish, yeah. And the $90 strike price seems to be a real focus point, a kind of battleground. But, and this is important, you can't ignore the short interest. Nearly 11% of the shares are sold short.
11%, that's significant.
It really is. That's a lot of traders betting against the stock. So you have this fascinating tug of war, right? Options bulls versus these committed short sellers. It sets up a potential short squeeze situation if the stock keeps climbing and forces those shorts to buy back in.
Okay, so tension in the fundamentals, tension in the sentiment.
Yeah.
What about the charts, the technical picture? Well, the trend has just been incredibly strong, powerfully bullish. It's gone from the mid-50s to over $90 just since June.
Quite a rally.
And money flow has been consistently pouring in. Buyers seem to have been ignoring those bigger economic warnings, maybe?
Seems like it. However, that momentum is now, well, it's kind of redlining, flashing an overbought signal.
Okay, so maybe too far too fast.
Potentially, yeah. And Friday's final candlestick, it showed indecision. Like buyers maybe lost some conviction or just ran out of steam up here. Plus, volatility's ticking up. That increases the risk, either way, big breakout or maybe a sharp reversal. Can it keep this pace? That's the question the chart poses.
That really is the question. So we've got these conflicting macro signals, WDC's huge growth promise, but also fair valuation metrics, this tug of war in sentiment, and now these technical warnings. Okay, let's synthesize. What's our verdict here? What should you maybe consider? Our take on WDC right now is a wait-and-see approach.
Yeah, and that's not just because things are mixed. It feels like WDC is truly at a crossroads. You have that strong trend the analysts love, but it's running headfirst into those recession warnings, and a chart that just looks well overextended. Chasing it right here feels a bit like, showing up to the party just as they're turning the lights on. The risk-reward seems skewed right now.
Right. So for the week ahead then, what's the key level? You need to watch $90, watch it like a hawk. That seems to be the pivot.
Absolutely the pivot. If buyers step in and defend $90 and manage to push past $93, maybe you see that short squeeze ignite. But if it breaks below $90, that would validate the overbought signals. Could see a pretty quick pullback, maybe towards the mid to high $80.
So $90 is the line in the sand for the near term.
Pretty much, yeah. It's the key determinant for the next significant move.
Okay. So final thought here. In a market this uncertain, with a stock like WDC showing both real potential but also flashing these big warning signs, Sometimes the smartest move is just making sure your portfolio is properly backed up before you go installing any new high-flying software. That's all for this deep dive. Remember, this podcast is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investment decisions. Thanks for tuning in. Catch you in the next episode.